My 3 tips for successfully raising money for a new business. First and foremost, it's about being persistent and passionate about your idea. This could go in the bucket of that should go without saying, but it is extremely key. Most venture funds, private equity funds, any really angel funds, anyone that's investing into businesses are typically hearing 5, 6, 7 business plans a day. And there's lots of great ideas out there. The money tends to go with the entrepreneur that is incredibly passionate and that the investor community believes will be able to navigate through the tough times that hit any business and be successful. And that starts at the first gate, which is raising the actual money. So it's all about being persistent and passionate about your actual idea. The next tip is around building relationships with specific investors and really building a track record with them. So the idea would be start even before you're thinking about raising money and get in front of these individuals, tell them what you're doing, check back in 3 months later or 6 months later once you've delivered on that process. And over time, you'll start to build a track record with these people, with them not even having to invest in you, but see that you're someone that can deliver on your promise and deliver on the tangible goals that you've laid out. And that's a huge differentiator between those other 5 or 6 or 7 people that are going to be pitching those institutions that day or that week. And then the final tip is really about being realistic about your valuation. We all want to raise, in general, the most money we can and give away the least amount of the business as possible. But I think sometimes people miss the forest through the trees, as the saying goes, or they can't see the forest through the trees. It's really about getting the company off the ground, getting great financial investor partners to help you build and build a very big business and a big pie, if you will. It's not necessarily about trying to angle out and keeping the most amount of pie as possible early on. So I think that's one snag that typical entrepreneurs get caught up in that they are too concerned early on about each little percentage here or there, where I think kind of stepping back and taking a bigger approach is more likely to be successful. So those are 3 insider tips to successfully raising money that I know will be helpful for you.